All right, everyone, welcome back to 7-Minute Options. Today, we're going to talk a little bit more about delta and about probability of touch, and maybe get a little bit into the whole mindset of how you got to look at these. So if I open the options table on Tesla, right? And let's look at the June 18th expiration, the monthly expiration in the June cycle. All right, so let's start with ITM. So last time we talked about delta, and we talked about how the delta of the option, right, which is how much the option changes if the underlying changes by $1, is very similar and often equal to the probability that this option will expire in the money, right? So you can see, for example, 40 delta, 35% ITM, right? Very similar. 22 delta, 18% ITM, right? These are very, very similar. And so you open a position, and what often happens is the stock starts moving, right? Like you open a position that's like 30 days away or 45 days away or 60 days away, and 5 or 10 days after you open your position, the stock starts getting really close to your short strike, right? And it's important not to panic, all right? And here's why. There's this great number here that I like to look at, which is percent touch, right? This is the probability of touch. So what that means is this is the probability that this underlying, in this case Tesla, between now and the end of the day on June 18th, what is the probability that a certain strike is going to be touched, right? In other words, let's say if I look at, okay, right now Tesla is trading for 582, right? So let's say, you know that Tesla is going to go down and up and down and up. So what is the chance that it's actually going to hit 700? Again, I'm not saying it's going to expire. It's just going to hit 700. And then once it hits 700, it might go back up or back down, like it, whatever. There's a 17% chance in this case that it's going to hit 700. What's the chance that it's going to hit 600? 82% chance, right? And what you find is that the probability of touch is roughly twice that of the probability of the expiration being in the money. So for example, if you want to sell, let's say, the 700 call, okay? And you look at it and you say, oh, it's the 11 delta, right? And if I look at the probability of it being ITM, it's going to be very similar to 11, okay? In this case, it's 8%. So there's an 8% chance that Tesla is going to expire higher than 700, right? But if I do that, I have to keep in mind that there's a 17% chance, right? Again, it's twice that of the 8. So it was 8% being in the money, 17%, of it touching the 700. That means there's a 17% chance that at some point between now and June 18th, it's going to hit 700. And if you sold the 700 strike call, then you're going to be really nervous, right? Because at that point, you're going to think, oh my God, okay, if this goes any higher, I'm losing money. If it goes any lower, I'm good. So yes, you only have an 8% chance of it expiring in the money, but there's a 17% chance that it's going to toy with you, right? That it's going to test your nerves of steel, all right? And so what this looks like in real life is I opened an iron Condor in Tesla roughly a month ago, right? Actually, yeah. So let's say it's, there it is. It's the 580 short put. So I sold the 580, bought the 570. So this is $10 wide, which means my risk on this is $1,000. And you can see it's very close to the money there. And I sold the 890 call, bought the 900 call again. So it's $1,000 risk on the upside. And so you can see here, when I sold the iron Condor, so this line here, this vertical line represents April 26th. That's when I sold this iron Condor. This line represents June 18 is when I'm going to, that's when it's going to expire. And you can see when I sold it, Tesla was like pretty much halfway in between these, right? Like it was just around midway through these two horizontal lines. This line is my short 580 put. This line is my short 890 call. And so it was right in the middle. And I thought, you know what? IV is kind of collapsing. You can see that, there's a fair chance that it's going to expire in between these two lines. And so Tesla's had a lot of bad news recently. There's a lot of other companies coming out with electric cars. I think Ford released its electric F-150, whatever, prototype press release thingamajig a few days ago. And there's a lot of people betting against Tesla, like Michael Burry. And so Tesla's had a bit of negative press lately, so it's heading down. And as you can see, about 5 days ago or 6 days ago, it actually breached my short put, right? It went below, which means I was losing money. I was in a losing position, right? If the stock would have gone sideways from there on out, this would have lost me money. I collected good money for this. So this Tesla Iron Condor, right? I collected $316. Today it's trading for $448, which means if I buy it back today, I would lose about $130 on it, right? And yet, if you look at it, I'm not panicking. So there's a couple of reasons why I'm not panicking, right? One is there's still 28 days left until expiration. There's no need to panic if you have 28 days. You have plenty of time for this thing to make a bit of a comeback. The other reason I'm not panicking is because I know that the probability of touch is twice the probability of it expiring out of the money. Remember, at any point in time, there's a 50% chance a stock is going to go higher than where it is right now, and there's a 50% chance it's going to go lower than where it is now. So yes, like 6 days ago, it breached my short strike. And, I muttered something nasty under my breath, like whatever, and I'm just going to wait. And sometimes it goes lower, sometimes it goes higher. So right now, I'm just going to wait. I'm not going to look to close the position or roll the position until I'm at least maybe like 15 days away, or 20 or 15 days away is when I start getting serious about rolling it. And right now, it's actually above my short put, so there's no need for me to panic. I'm just going to hold this for another 10 more days and see where it goes. If this starts moving back up, you're going to see that position gain value rapidly, right? Because time premium is going to start expiring faster and faster as we get closer to expiration. Also, as a stock rises, it typically becomes less volatile. So the IV would continue to drop. And you can see the IV has been dropping steadily for the past 3-4 days here. So yeah, if it keeps rising, my IV will drop. And my goal here is to close this with a 50% gain. In other words, if right now I sold this for $316, I'm hoping to buy it back for $158. If I can spend $158 to close it out, I'm going to be very happy.